what are you looking at lately in the markets and as that relates to Bitcoin and crypto?
Yeah, so I mean, the markets are still kind of watching every headline coming out from Russia and Ukraine, right? Friday we saw that gap up initially, or I think it was Friday, and the markets had gapped up after supposedly Putin had said something positive about maybe negotiations, and then I think it was very interesting to see how the market, after just a little bit, I mean, very limited upside, it opened up and then right away started to sell as people said, listen, this guy isn't some guy that you can trust in what he says, and there's no troop movements to signal any pullback. They're still bombing, the crazy amounts there in Ukraine. So the market really sold very sharply, closed at the lows of the day, which is not unusual for a Friday when the markets are closed for 2 straight days. So people don't want to be buying into Friday when you have a war that could, God forbid, could escalate and draw in more countries or NATO. I mean, there's just so many risks right now that it makes it very tough to be someone who's just accumulating. There are stocks getting, I've been accumulating. Last week I really did take some initiative and start accumulating plays. Zoom. Some of these charts are just getting to the level. And listen, in bear markets, notoriously things go lower than you would think. But when you look at a chart like Zoom, and I'll throw it up here on for everyone to see, you're now getting to points where you can kind of make a case that it is at a valuation level. So for me, I love looking back on charts and seeing that price is trading into where it was at a prior point before all this publicity, right? So during COVID, Zoom became a household name, and you're now trading at levels that were prior. So here's your March, here's 2020, right? Right there. That's when COVID hit, and this is when it obviously took off. You're now trading back to levels where it wasn't a household name, yet it is still a household name. So, granted, could you overshoot this level? Yeah, of course. But ultimately, I think at these levels, it starts to make sense to nibble on some technical trading levels here on good quality names. I wouldn't go to kind of the small cap route where they still don't have the earnings behind it. But Zoom, I think, is trading around a 20, 22 PE, which again is not horrendous now. When it was at 100, that was ridiculous. But at 20 to 22, you can kind of make sense of that. Yeah, so notoriously stock splits, right? I want everyone to really fully understand that nothing changes for the company, just the share price and then the amount of shares outstanding change. But, it is a way to kind of artificially keep your price up. And it does give buyers of options. It makes options a little bit cheaper. So, you don't have to, remember, you can't buy partial options. You can buy partial shares, but I don't believe you can buy partial options. So for a lot of investors that like to play options, they're just not able to play Amazon prior to the split. So I understand it getting a little bit of the upside. To me, I look at the chart and it still hasn't corrected enough to make me feel comfortable. You can see that you're now trading kind of in this range where if you connect these lows, you're just kind of dangling right around this breakdown point. And that's what you don't want to see. You don't want to see this really break lower. If it does break lower, I think you're probably headed down towards the 2000 level on the chart. But yeah, interesting news. We've seen Google announce it. Apple did one not too long ago. Obviously, Tesla was a big one. But remember, Tesla did it during a bull market. So it just got amazing price action. You're now in a different environment where I wouldn't expect the bullishness to last quite as long. You're right on this major trend line. Let me show you this, because this is really, this trend line we hit just maybe 2 weeks ago right here, and you had the big reversal. This was when the invasion first took place. Now you're back into that line again. And you have to say that the more times you hit a level, the more likely you break. And again, I love the analogy of if you're on one side of the door and it's locked, and you need to save someone on the other side, you may run against that door as hard as you can. Probably the first, second time, maybe it doesn't break down. If you keep hitting that door with all your might, eventually it breaks down, right? It's just a matter of how many times. So essentially this trend line is a door, and you've now hit it very many times, and most recently just about 2 weeks ago. So there is real risk that Apple could now be the next one to see a big decline. And hedge fund managers and institutions are so overexposed to Apple because it's been a darling for so long that really that could be a major collapse play where you could see it take down the markets overall, especially with the size of that company. At least Google, I feel like Google, at least from a fundamental point, has a little bit more earnings growth than Apple. I've always been marveling at Apple, how it kind of is trading at this multiple that doesn't reflect kind of the future growth. I mean, everyone said, oh, the App Store and this and that, but the App Store, I mean, again, comparative to their overall business, it's not that big. They still haven't announced an Apple Car, which was thought, I mean, there's so if you just look at what they have, it's definitely not a growth company. Probably should be trading at like 15 PE, and it's definitely in the mid 20s at this point. Here's your chart of Google. And again, Google, same kind of thing. It almost Amazon-ish, right? You kind of have this area right here where it's just been trading sideways inside of this range, and you're definitely hammering on support. It hasn't broken yet, but this is a chart. I mean, this type of chart pattern is a topping chart pattern. I call it kind of like a 3-mountain top, where you have these multiple times where it tries to break out and it keeps failing. And it's kind of like a Bitcoin-ish type thing at 65, 68,000, where, you know, there's a lot of bullishness. Everyone loves the company, but then why wasn't it breaking out? And the answer is, well, there's bigger money selling into it there, right? So this 3,000 even number, there's definitely big money. And if you break this doorway down here, it's got quite a bit of downside potentially, probably again, back to $2,000 or so. Again, if you look at the chart of Tesla, like this stock has broken down. Yeah. Now you're still coaxing in buyers because people are mentally prepared to buy the dip, but you broke this channel that it was in, and it again retraced perfectly to what we would call the scene of the crime right there, and now it's getting pushed back down. And I've said for a long time, and I've been bearish on Tesla based on valuation, that eventually I think it's going to $500, and then 500 will be a big test level here, and then these lows right in this area. So right here is going to be a major test for whether or not this stock can hold up. And again, this stock was trading, over $1,200 not that long ago. So that would be a major haircut. Bitcoin is behaving kind of just like the chart signals it should. Everyone's always saying, well, what's going on with Russia and Ukraine, that should help it. But the bottom line is the chart is the chart, right? And we know charts have a powerful essence to them. And essentially what you have here on the chart is a lot of choppy action from this bigger move down. So again, this is what we call a megaphone pattern. These two lines are slightly widening. You could also just call it a bear flag, if you will, but you can just see how you're just going up and down like this inside of this range. Now, if you look at 1,000 of these patterns, right, you'll see that a majority, and again, that, 60%, 70, 80%, something in that range, of eventually what ends up happening is you'll see, pops and then eventually a breakdown to the downside. So again, as of now, as long as you stay within this pattern, this is a midterm bearish signal. It doesn't mean it's going to break down tomorrow or even next week, but inevitably, if you continue chopping sideways, we refer to it in the technical analysis world as bearish consolidation. So, again, I love it long term, and you can play lots of short-term moves inside of this range, but you should at least for me, I'm expecting it to drop significantly more. I still have a price target sub 20,000 or just sub 20,000. A lot of people are saying, well, basically you have this verse 1 versus 2 scenario, right? Where, Bitcoin has never gone and touched a previous pivot high. So the idea that it would get down to 20,000 is kind of crazy to a lot of Bitcoiners because that would be the first time it ever did that. But then you have the other side, which is, well, if you're entering a bear market or a crypto winter, well, then you have 80 to 85% declines historically. And then that puts it way below 20,000. So, one of these scenarios is going to be right. One of them is going to be wrong. I happen to be in your camp. And that was, by the way, a great point. I actually was doing that analysis this weekend, where if you look at this here, you have basically a parallel channel here, right? So pivot point, and then it broke above and retested there. And you have pivot point, pivot point, pivot point. So notice how that channel is downsloping. This channel is kind of upsloping. And you're right. Downsloping channels have a much bigger propensity to break up like this one did, versus slightly upsloping chop is a bigger propensity to break down. So again, they're very minor details here that most investors wouldn't see. But when you really look at these charts closely, there is differences here, and investors need to understand the probabilities that come off of that. Yeah, and I think one of the big differences that Bitcoin hasn't experienced really is that, since its inception in 2009, this is the first time that we've seen significant inflation where the Fed can't necessarily go right back to printing money, right? Which is, you could argue that was the base case for why Bitcoin was needed, right? Now, if you stop that printing press, at least for a short amount of time, it's kind of a new scenario for Bitcoin. And again, to me, that could be a reason also to see further downside, just like in tech stocks.
What will it take to get it back up to that $69,000 to $100,000 level?
Yeah, so for me, on a technical basis, this orange trend line would be something that if we started trading above here, and I don't just mean piercing, because you could see over here it pierced briefly. You could even argue that it closed one day above and then reversed back down. But if you started really trading above this area, then at least I would say it's going back to this point here around 52,000 or the midpoint of this channel. That would be the beginnings of something that I'd pay attention to. And then obviously, if we start trading up, I think people start jumping back in. There's that momentum trade that would kick back in at a certain price when you start to get closer, and eventually you would get through that. Now, to see that, I mean, I will say this is that, a lot of people have bashed the Biden administration for lots of things related to crypto, but the regulation last week that was brought out is super, super positive. It's not a negative for crypto, and it's that on that track of what I've said for a long time, which is you need regulation in the space to get bigger adoption, meaning that if you want pension funds and you want more institutional money and you want the 80-year-old that has $50 million to actually invest some in crypto, you need to see things that are setting up to make it safer for those investors, right? They're risk adverse people. They have so much money, they don't need to take risks. They want kind of safe trades. And that would be something that I would watch for. So more regulation on the positive side. And I think that the Biden administration really took a nice step this direction last week. One of the ones I've been watching, and I've liked the price action on this, is on Polkadot. Polkadot's been holding this key support right here. You got a secondary support line kind of right in this range as well. And what I liked about this is that while a lot of the other alts are kind of just right at their lows, this one's been creeping up the last couple of days and actually outperforming Bitcoin. And again, these are very small candles, so it could change on a dime. But what I like here is, and let me just erase that line, is that I'm watching this trend line right here, and it looks to me like you might be on the verge of just a short-term breakout on Polkadot, right? So you can see, again, just connecting this high to this high, and you've now gotten just above it. So those are little things where for me, you wouldn't risk a lot, but what I like about it is you can have a very defined stop. And what I mean by that is if price breaks these recent lows, you just stop out, right? So, I mean, you're not risking a whole lot, maybe a couple dollars on Polkadot, but if you get a breakout here, I mean, it's possible to at least revisit this area here just under $24, which risk reward does make some sense here. So that's what I'm looking at. There's not a whole lot else. I know a lot of people are looking at Terra Luna. To me, it's hype going into what you were mentioning probably, and that's why you're seeing it. So I'm actually, if it pops north of 110, I would consider shorting it, in fact. And then, yeah, I think that's really about it. Cardano hasn't looked particularly great on the charts. It's kind of just coming off of the lows here. You can see, again, comparing this to Polkadot, right? It's night and day. I mean, this is barely holding on to these little low areas here while you've seen Polkadot start to move up. So I think that's really it. I would say Polkadot, keep it on your radar in terms of alts. Trades I do are very short term. I'm in from the 16 range on Polkadot already in my service, and we'll probably unload it if it gets to 20 or just above 20 and just say, okay, done. Now we wait. And again, I've said before that I really truly believe that crypto is going to have its .com collapse. And if you look at the .coms, and even the biggest one, Amazon, still dropped $110 to about $6. So if you look at percentages, I mean, that's scary even to think about what Bitcoin, but that kind of actually brings up Bitcoin's 4,500 case that you were talking about earlier as well, where that would kind of be your worst case scenario, but that would match Amazon. So if that's the case, then you're seeing Polkadot and these other ones going way, way lower eventually.